Hey everyone, it's Lee Goldstein, the Trading Director at 10 Minute Trades, and I want to welcome you to this week's podcast, episode number 26. And it's the weekly wrap up of May 15th through the 20th in the year 2022. So sit back, relax, and let me show you what took place this week. Okay, so let's put the market open trades. I'm going to categorize them in one review rather than going over every individual market open trade because we have one every day, gold, oil, and the NQ. We're doing them almost every single day. So let's categorize them. Oil and gold, pretty manageable and profitable. Definitely something's going on in the market, particularly with the NQ. What I noticed is that the moves we're seeing are not as big. They're not following through quite as much, and that started this week. So at some point, we may want to modify our setup on the NQ. We're going to keep a sharp eye on it. It's still profitable. We made money on Friday. I made money on Wednesday on it. Didn't trade it on Thursday. Had a lousy trade on Monday. So it's people are definitely making money, but even some of our big hitters in the trade room have had some NQ trades that haven't worked for the first time in a while. It's not that our setup isn't working, so I don't want to get anybody worried about it. It's fine, but we want to be aware if we think the market is changing, we might want to shrink our targets a little bit and understand that you may want to get out of the trades a little bit quicker. So very important to understand how the markets are moving, incredibly important to try and see when they start to change. So that's how I would categorize our market open trades. On Monday, we had Empire State Manufacturing, and it's really difficult to put that in a category when it trades by itself like it did last week. It seems to move the NQ a little bit. It seems to move gold a little bit, but normally that trade doesn't trade by itself. So it's one of those like this week's building permits and housing starts. If a report is not trading regularly in the same way, meaning it either trades by itself or it trades with other reports all the time, most of the time, occasionally. If it's occasional, then we can test the report in the way that it trades most of the time. Then we can usually come up with a good setup. If it's sometimes, we really can't. If it's occasional, if a report is 50-50, if it trades with news 50-50, other news, if it trades by itself half the time, then it's hard to get a good setup because it doesn't do what we need it to do more often than not. That's the key phraseology, more often than not. Empire State and right now building permits and housing starts are not trading more often than not the same way. Okay? When that happens, I always can come up with a setup, but I don't want you to trade it unless it's a setup that gives us a profit on a regular basis. So keep in mind the phraseology more often than not. Very important to understand what I mean when I say it. And Empire State and building permits and housing starts. Also, I would say capacity utilization and industrial production from this week as well fits that same description. So you want to be careful when we trade those. Don't trade them large size contract amounts, okay? Tuesday, we had a family money trade, U.S. retail. Been trading it as a trap trade. Lost money last month on it. Was a nice winner this month. Trap trade coming back again after not working last month. So I'm still feeling real good about U.S. retail as a trap trade. And then I'm starting to feel a lot better about Tuesday's API report. Made money again this week. And it just looks like because the price of oil is so high that people are interested in that report again. It's getting a little more volume. So I'd love to make it a family money trade again. It's not quite there yet, but it is becoming worthwhile to trade. So I'd come into the trade room on Tuesdays to trade API. Tuesday night, the wage price index from Australia was an excellent report because of its inflation qualities. That was an excellent trade. I heard from members that traded the British CPI at 2 in the morning on Wednesday. I did not trade it. I looked at the charts. Looked like there was a British pound whipsaw before the trade that made it a troubling, difficult trade. Canada core CPI unfortunately, I had two trades this week that really were better trap trades than they were as breakouts. And that bit me on Canada CPI and existing homes. They both could have really been awesome winners, and I took a hit because I did not trade trap trades. But that's how you learn. Now, sometimes you say, oh, you're just a really dumb person. You don't know what you're doing. But there was a lot of evidence, and this is not an excuse. This is what analysis made me do. The analysis was that the CPI report was fine as a breakout. Same thing with existing homes as a trap trade. The testing was there. Sometimes the markets are so volatile like they are today, and it just does make it harder. I will, going forward, go with the trap trades on those setups. I just think, getting bitten a little bit this week really makes me see those trades for what they are. So that's how we'll deal with them. Crude oil inventories on Wednesday. The oil reports are trading quite well. Wednesday's oil report, another nice winning trade if you traded it. The 20-year bond auction, the bond auctions are just difficult trades. That was not a winner. But then the evening of the 20-year bond auction, we had Australia Jobs. Australia Jobs, I struggled because of what to do, how to trade it. We have been trading it as a trap trade for 6 months and just breaking even or making $30 or $40. No stops, but not making much money. We took it as a breakout and it worked very nicely as a breakout trade. So probably going to go with the breakout on Australia Jobs. All right, because it looked nice on Wednesday. We'll go back to our original setup for a couple of months and see how it goes. Unemployment claims, Philly Fed was a range trade that looked good if you took it. And then natural gas was a winner for us, small winner. It was a tricky move in the index and a very unusual, gigantic reversal that really made no sense. Something was going on with that report before the report because natural gas was quite volatile before the report. But we've updated our DMM on natural gas and on oil. Both of our daily reports are updated and trading very well. And that really closed out the week with event-based trading. And we had 3 market opens today on Friday, the Gold Open, the CL Open, and the NQ Open. And gold had no signal for 5 minutes, so I didn't trade it. And then oil and the NQ were both winners on the Open today. So a good ending to the week. Always an exciting, interesting week. I love doing these wrap-ups, so I hope you watch it. Give us a comment, give it a like, join the channel, subscribe to our channel. You'll know when we're going to stream. You'll get all the notifications about our posts. So this is episode 26. I hope you enjoyed it. And every week we'll bring you the results of what happened. No holds barred. Truth only. Next week, FOMC minutes. Very, very exciting potential for that trade. Make sure you get into the trade room, and I'll see you next week. Take care.